Hello everybody, Najee here again from NajeeChaw.com, and I have some up-to-date news and just sharing about what's happening in the market right now. Let me shift my camera, get comfortable. I hope you get comfortable as well. So let's start with the first thing. So if you will see what shook the whole world recently, in the crypto world at least, poster boy FTX went belly up, tits up, we call it. It went bankrupt in a stunning reversal for crypto exchange, which is talking about FTX. And what happened before this was there was some debate and spat between CZ from Binance as well as SBF Sam, right? And what happened was that the backstory was that CZ was saying that Sam is doing some stuff on behind the scenes. Sam said nothing of the sort. Then what happened was that CZ decided to drop all the FTT tokens that Binance has, because Binance was one of the early supporters, the early investors, the seed investors of FTX. So what happened was that FTX went on a downward spiral. So let me zoom in for you for the last 14 days. This is FTX price chart. So you see when CZ and Binance start dumping FTT shares, FTT tokens, the price started to steadily decrease. And truth to be told, I almost bought into FTT when it was about maybe $30-40. When it's moving sideways like this, I almost bought in, but I'm not too sure why. I just decided not to, right? So, and then what happened was that Sam eventually told CZ, Sam from FTT, tell CZ, help us, buy us out, save us, right? So CZ then sends a tweet saying that, okay, well, let's do a due diligence, non-binding letter of intent. Within 1 day, he then after they say rejected. He can't buy, he can't save FTX because the rabbit hole is too deep, right? And what we found out eventually, the reason why FTX went bankrupt, right? Because of the way it did business. FTT is one company that issued, FTX is one company that issued FTT tokens. And the problem is that FTX has a sister company called Alameda. So what happens is that they sold or sent some tokens to Alameda, who then use it to trade and buy back FTT. This created like an internal decrease of supply, slowly pushing up the price of FTT. So this was really, it looks sexy on the outside, but what's happening is that this is over collateralized. That means that they took a loan based on the collateral, on the token that they have, but the token needs to be a certain price. So let's say if the price of the token is $100, you can borrow against $100. But what happens if you borrow against $100, but this token $100 drops severely from, let's go a bit higher, okay? When it's gone good days, it's based on $50. But what happens if you took a loan based on $50 and then the token price drops to $27, $25, alright? The person who loaned you the money will be like, hey, there's not enough collaterals. You gotta give us more money or we do a margin call, right? So what happened was that it was exactly that. They were faced with a margin call and they were faced with a bank run. As Binance sold their token, they put a sell pressure. It dropped the price of FTT. We made the margin call more urgent, and people started rushing to FTX to withdraw their tokens, withdraw their money. It's a double whammy, so it slammed FTX, and FTX couldn't be saved because it needed $9.4 billion to be saved. And normally when there's a hole, it's kind of hard to fill a $9.4 billion hole. If it's 100,000, 200,000, 500,000, we can move 500,000, a million, even 10 million, right? But 9.4 billion, it's a lot of money. And that's the reason why FTX just crash and burn, okay? And that leads me to my next point. So I'm setting the stage, the tone, right, about what happened, okay? FTX collapses, bankrupts, right, after a series of big stuff, from Luna Terra to 3AC to Voyager, to Celsius, then FTX. And FTX was particularly difficult because it was the poster boy of the crypto world, you know. And Sam was lobbying to the US government and lobbying, getting involved, a bit more involved with politics, you know. So he had this very goody two shoes sort of personality, which makes it quite nice, right? But so when all this happened, it shook the world quite a lot. And that's what happened till date. That was until Friday. Then after that, Crypto.com, Chris shared this, okay? So Chris said it's a very sad day for the industry. This industry means the crypto industry as a whole. So once again, this confirms that building with compliance and security as foundation is the right long-term move. So, right, and then if you scroll down some more, this is very important. Why I want to bring up this Twitter thread. It says, Crypto.com has never engaged in irresponsible lending. So there's no risk of bad debt losses, number one. Then they have never operated a hedge fund. No risk of trading losses. Which is what happened to, to FTX. Because they loan money to Alameda for trading to make more money back, right? So that's why with Crypto.com they're a bit more conservative. They don't do irresponsible lending. Okay, so that they won't have any risk of bad debt losses. And they don't operate a hedge fund. They have a very simple business model. The key thing to understand is to provide access to cryptocurrency to the world and take a fee for providing the service. Very simple, right? And he's also stated that their exposure to FTX meltdown is immaterial, less than 10 million of their own capital. Okay? That's very little compared to their global reserves, surpassing 1 billion a year for the last 2 years. Okay, so that's the key thing. All right. So, and then what happened after this, I will share in a different video because I don't make the videos too long. Chris said that, hey, so what does the community need to do now? Say on November 9th, say we must work twice as hard to rebuild the trust that was lost, because what happened with FTX made the whole world look at crypto like not so trustworthy, right? So Crypto.com will do its part as the third largest crypto platform globally with 70 million users. And upon the collapse of FTX, Chris was the first one who said, we will show you proof of reserves, proof of the money that we or Crypto.com carry in their business account, their corporate account, to make sure that they're not insolvent, to make sure that they have enough money. And the key is this, you see at the bottom, Chris said on November 9, we have always maintained a one-to-one reserves and believes that doing so is the most basic operating principle. Crypto.com will push for increased transparency and regulation of the industry to ensure that this is a standard by which all crypto platforms operate by. This is very important. So I bring the backdrop from what happened with FTX, how it collapsed, and how it leads towards Crypto.com sharing about how they don't do business like how FTX does, that they don't operate a hedge fund, so they have no trading losses, and then they have very little exposure to FTX, less than 10 million. Also, he pledged to work twice as hard to rebuild the trust, right? And most importantly, they maintain one-to-one reserves. The key of this one-to-one reserves means that if the customer put 100,000, they have that 100,000 in their account. It doesn't go anywhere. They don't loan it out, they don't farm it out, don't do funny things, right? Okay? And that they focus on a very basic business, which is provide access to cryptocurrency and take a fee for their service. That is what I'm trying to say in this video. And this is really 9 minutes. So I'm going to update you in the next video. I apologize for that, but it's really important for me to split this up into few videos so that it's not too heavy, not too long, okay? I'll catch you next video. If you like this channel, please subscribe, like this video, help me to grow this video. I want to serve you more. Take care. Bye.